considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Sorry, just a minute longer here, guys. I'm sorry, I just started off in YouTube. Anyway, we have Scott today, and I have his contact information, and if you want to reach out to him. So sorry about that. I kind of cut it a little short on that. Scott, go ahead. Take it over and share your screen, and I will reproduce it here on my end.
Alrighty.
There it is.
Alrighty.
Okay.
So markets are all over the place right now. You had ECB talking, Putin came out of nowhere and started chirping, and gold, or actually gold's getting smushed now, but crude and gold were all over the place. This is a little bit ago, so I didn't even get a chance to catch up with this, but there was some monster sell ice in here, as you can see. So I guess we're switching more to me just explaining stuff and not putting on live trades in here. Correct, Bruce? Why I actually didn't put a trade on this account, on this
yeah. I mean, this, as you guys know, the history here was a live trading room, and by design, all a part of our education. We have the educational course. We do the live analysis that refers exactly to the course, so you can see it unfold, the education unfold in the live market. And then we had this element here of JTrader and Scott trading live, so you can see exactly how they're trading. We're going to shy away from that. We'll still do that live analysis, and Scott will look for how he will show you how he trades and how he looks at these markets, but it's not going to be live trading anymore. There's just too many risks involved with this, and we think that people get kind of wrapped up into the trading and they miss the points here in the education. Instead, Scott will say, these are the things I'm looking for. This is how I trade. This is where I put my stops and the entries I'm looking for, but it is not a trade recommendation nor a trade calling room whatsoever. And that's what we want to get across here. This is about education, and we're trying to teach you as much as we can about how to trade successfully, and not just to follow.
Right. I've been in I actually really haven't been in trade rooms before I started this one. I did some incognito. I saw some people talking about certain trade rooms, so I went in and just to see how what these guys were doing or how they were trading. And most trading experts, doing air quotes, never actually have made money, make money. And the other thing too is, you're exactly right. So this in my trade room as well is to teach you guys what to look for, how to trade, how to identify these volume events. This is the driver of my trading, but it's not. I have a distinct style of the way I personally trade these volume events. I tell you every single week, the volume events are the science, right? The art is how you trade them. I have a specific way. You might want to listen to how I do it, considering I've seen thousands and thousands and thousands of these over the last 3+ years. But the whole point of the webinars and explaining this stuff to you is so you understand how markets react to these volume areas, and then you apply these concepts into your own trading. And if you're brand new, then you try to follow, not put trades on like I put trades on, but trade it like I trade it, right? And that's what my trade room's for. It's way more in depth, where I go into, I do it every day and explain exactly what I see and where I'm putting the orders in. We have a spreadsheet. You guys will see that. But it's for you guys to understand, how I'm trading these areas. And if you are, an accomplished trader, or you understand what's going on, then you just apply these real-time volume events in the areas that you deem important. That's the whole idea of everything that I'm doing, right? And I love teaching traders, and I like doing webinars. It helps keeps me grounded from losing my mind. A lot of times I still lose my mind, especially lately, but I like teaching you guys, but this is not, hey, it's buy here, sell here. It's understand why I'm buying and selling, and then you can apply it for yourself. So back to the trade room, like I would get in there, and this guy would, the one that I was watching, the guy would put on a trade. And then, he would kind of explain why he was putting on the trade. And then, he'd say, okay, here's my stop, here's my target. And then out of nowhere, you just get out of the trade. And I'm sitting there like, okay, are we just supposed to like read your mind and why you did that? Or, he'll explain after the fact. Some of the times he did. Again, I wasn't there very long. But that's the point. It's like you never know, like, I may see something that I don't like, and just from my experience, and I'll get out. It's not really following my rules. It's just you're never going to make it as a trader if you're mirroring somebody else's trades. You have to learn this stuff yourself. Um, so that's my start of my rants for today. I'll probably be ranting a lot. I've been getting my head kicked in the last few days, and guys, it's trading. I don't know what else to tell you. You're going to have drawdowns. We talk about it, every week. Your P&L as a trader is, if you are a profitable trader, it will do that. But in the meantime, it will do that, right? And that and that and that. And that's, you go to a casino P&L, same exact thing. So you've got to understand there's going to be ups and downs. Yeah, you can try to get better and understand why you're losing or what you did wrong and eliminate mistakes, but you're still going to have losing days. Markets are random, just like, I had a reversion trade that we're doing in my room on crude a little bit ago, and it was looking fine. And then Putin comes out, opens his mouth, and the thing just rips, 70 ticks. So it's like, I don't care how great your system is, these are still markets, and you're going to have losers because there's a lot of randomness in these markets, right? But this is the best thing that I have seen in 25 years of trading. It hasn't quite been that long. I'm not that old, but about 23 years, to help you, understand what's going on in these markets, and then have, areas where if these markets violate, then you're out of the trade, so on and so forth. So anyway, getting in the S&P, I am short this on another account, where this was some, actually this wasn't it, this was it over here right at the open, large sell ice here, 1800 sell ice. That's this black zone. And the way I trade these zones is there's one of two ways you can enter them. You can wait for a full ATR, where we use the 5-minute ATR and Thinkorswim. It's the 14 period Wilders. It's just the default Thinkorswim ATR. If you want to understand what this is, just Google Wilders ATR. You can bring this up on basically any platform. That's the one I use. I don't make things complicated. But what I saw was this sell ice. And of course, these markets are, went ballistic yesterday and then into the open today, but now they're pulling back. So you can see, so this zone was important. It's still important. And now it's important more for a support zone. But this was, let's just look at all the things that happen here. And again, I draw these zones where important things happen in the market, right? So there's 4 important areas of charting are tops and bottoms of balance areas, right? Tops and balance areas, just consolidation where traders are placing bets, for lack of a better description, right? Tops and bottoms of balance areas, high volume node balance areas, they call them HVNs. That's where the most trade occurred in a balance area. And then the other two are directional conviction and buying and selling tails. Like this was a buying tail yesterday. So that's where I draw my zones, and you would be absolutely amazed at how these markets react to these areas when they come back to them, and or gives you information if they just blow through. So like yesterday, it did react initially, and then it finally pushed through. So that's information as well. So this was a very important area. This was a gap down, directional conviction, came back, gap right into this, failed again yesterday, same thing. You can see that selling tail, and then it recovered it. Facebook came out with their earnings yesterday after the close, and then it kind of ripped up. So even now, I'm keeping this zone here, even though it has gotten through here. The adage support resistance is now support, so this is now a support zone, right? So I fully expect this is where this market gapped up. I could even made a smaller zone here, right where this market gapped up from this morning. This was probably price about 42. So I'm short here again on another account, and I would look to get out there, among other areas that we'll go through. But anywhere in here, I'm definitely bullish this market. Obviously, you can make this one monster balance area too. Everything's fractal, right? So this is, you can imagine the shorts in here, the longer term shorts, the pain they're feeling right now, right? So the whole idea is any pullback now, these shorts get out of their trades, right? So now these zones are awesome support zones where you want to look to buy, right? And many times these markets will break out of balance areas and it's just so obvious, and you have these algos that literally snap it back in everyone's face because they can see what everyone wants to do, and then you get everyone puking back down, and then again, I mean, this is more of a convoluted balance area, but you can make this one here, there was one here, you can make this one bigger one. The point is, they break out, that's so obvious, everyone jumps on, then it pulls back, everyone thinks, and then you stop out, but all it's really doing is just stopping out the weak shorts, and then it goes. So be very careful is what I'm saying, especially in these equity markets and crude, trying to play the first breakout. The best trades are when it comes back to these important zones like right here to go long, right? So anyway, when I got short up here, it was, yes, I know this is a sports zone now, but it doesn't mean we can't pull back. I'm a day trader, and this will be a decent trade. I mean, this will be a 20, 30 point trade, and we could pull back and still be in this zone, and then I'll look to go long. If this comes back and melts right through this zone and gets right through this gap from the day, well, then I think we're coming back to these areas, right? So, but as of right now, my thesis is up. And my thesis, I'm probably a 50-50 thesis caller, right? It matters, but it doesn't matter. You come up with the best ideas that you can, but then you let these real-time volume events help direct you in the way. And then when everything lines up, when you have a thesis and then the volume event aligns with that, that's when you can trade bigger and so on and so forth. So, so basically I'm short here. This is a spot gamma level. I'm seeing if this, the only thing I don't like about this short, that doesn't mean it's going to happen right now, but as we've seen in every Bookmap webinar I've ever done, is liquidity levels, the market will head to them because this is the big money, and the big money will get the market to these levels. Like I explain all the time, how do I know that? Because that's the game I used to play when I was a large scalper. I used to put in, back then I could trade up to 3,000. I never really had 3,000 on unless I was wrong and trying to defend a position, but I would put in like 1,000 lot offer, right? It wouldn't be this far away. I mean, it was very contracted volatility back then, and I would say we're up in here somewhere, and I'd start getting long, knowing my offer was sitting up there, right? And then I would see how the market would react. If nobody was selling, fighting back against me, then I would just keep buying, and then I get a flurry of buying behind me, guys, that see these bigger orders coming in, they try to jump on the coattails. To this day, they do the same thing, and then it would just swipe right into my sell order. I'm out of my trade, done. And then I do it over, rinse, wash, rinse, repeat. Right, and I would that was my game all day, every day, right? So this is exactly what's going on here. It's obviously a little more volatile these days, but you can bet that this market is going to probably take out this liquidity at some time today. Doesn't mean it can't go lower first, absolutely not. So I am short. And there's some liquidity down here too. Again, the longer it's been in here, the more important it is, and the more likely it's going to tag that liquidity, right? So I would love to see, if this does come down to this area, I will look to get out of a portion of the trade if it can't punch through there. And then I have specific areas that I exit my trades as the market moves in my favor. And this is all part of, we go over this every day in my trading room. One of the prerequisites, if you decide to come to my trading room, is you have to tattoo this to your forehead, like a real tattoo. If you don't get it tattooed to your forehead and send me a picture, then you can't be part of my trade room. Just kidding. But the point is, you should be reading this every single day. So anyway, I pay myself as the market makes money available. Number 5 here. Right, so when I get in a position, then I'll watch these areas, and I'll get out a portion of my trade at these important areas. Ludwig levels, we talk about them every week. We'll go over them today. Market profile, composites, highs, lows, pointed controls, VWAP standard deviations, spot gamma levels. Struggling to get through liquidity. That's what I was just saying. That liquidity down at 41.50. If it struggles to get through there, I'll get out of a portion. And then important predefined zones. That's what we just talked about, the 4 important areas of trading that I have on those charts and those bar charts. candle structure, or an opposing SI setup. So those are important too, right? So say like the day continues, and or even so say we came down here, which I'm hoping, this is starting to make me nervous to get up. It's probably going to go up here now, but say this came down here, I got out of my trade, and then I'm long. Well, I would watch this prior event to see if it failed, then I would get out of some, right? I wouldn't say my ultimate target is liquidity. Well, if it comes up to this event and starts to fail, I'll get out of some, especially when it's confluent with something else, and you can see the spot gamma level. So these are just all areas that I will potentially get out of trades, and we'll go over them as we put on trades here, or not put on trades, as I talk you through trades that I'm putting on another screen. So the trade I actually did not put on, and I was going to, and I got sidetracked. And gold's a tough market to trade, but when you see, because stop runs left and right in here all day, every day, it's like the worst traders on the planet. I don't know how they continue to be able to, whoever's in here, it's like just puking left and right. When you see icebergs, you want to pay attention, and when you see icebergs like this, you really want to pay attention. So my threshold in gold, my tradable threshold on the SI subchart is 150. This iceberg was 1300. You do not see that. I think this is actually probably the biggest iceberg I've ever seen in gold. I should have been way more attentive to this trade, and you could see how the market reacted to it, right? So, guys, if you don't think this is an edge, you're just not seeing the big picture. Look at how this market reacted. Somebody in here, remember, the icebergs are hidden sell orders. Somebody was in here aggressively buying, like, yeah, this thing's going higher and higher and higher. Let's look at the chart here. This thing ripped yesterday. Look at the reaction here. So this wasn't in one of the, it was right in between these prior zones from past stuff. But everyone's thinking, yeah, this thing's going. And this is exactly what I'm talking about. Breakout of balances. How it's so obvious, everyone jumps on, and then they get screwed, right? And then when it pulls back, these are the best places to go long, not chasing the market, especially gold. But my point is, if you are staring at a bar chart here, even me with my zones, I think my zones are absolutely spot on. They're really good. They're really important edges for me, right? But this, was basically in the middle of nowhere, and you can see if we pull this back, there's really nothing here structure-wise, right? So if I'm staring at that and I say I'm long from yesterday, I'm like, yes, I got this. We're heading up to these zones up here, and then this market just stops in the middle of nowhere and does that. You're like, what the hell, man? And you puke out and possibly take a loss on the trade. And you're like, why? I don't understand. Well, you don't understand because you don't have all the information. That's what I talk about every single webinar. This is the completion of the information that you need to make the best decisions, right? I say it all the time. I don't care what kind of market technician you think you are. You'd be 100 times better knowing this stuff. This is the most important part of trading. Knowing, hey, wow, 1,300 sell eyes just came in there. I might want to pay attention and look at the reaction that this market had to that area, right? So anyway, I blew this. I sit here and talk about it. And I knew that was a lot. I put it in my trade room. I said, 1,300 sell eyes. It never retested. So a lot of these, especially in gold, it's a whipsaw show. So I was watching this. I was going to go short on that. The same reason I'm short ES. That never happened. But what I could have done here, and you can see these all look like tiny events because it's relative to that main event there. But these were stop runs where I could have just jumped in. Because I wanted to short this original zone, I could have just jumped in and then trailed my stop to the newest setup. So this was not threshold, but this one was. So what I should have done here, I'll give you an example how you can trade these zones that they don't retest if you just love an area. Like that area was not some special area for me to get aggressive out of that zone. I was waiting for a retest. But when you get a new setup, you can then just jump in and then trail your stop to the most recent setup, right? So I'll even show you what I was looking at on the spreadsheet that we use in my room. So this, where are we at here? I think I put it in here. So this zone was 06. Top of the zone was 1960.6. The bottom was 82. So I just used the 06 and 82, as you can see here. Yeah, that was this, right? So I had it ready to go, but I was waiting for a retest of the zone. So my short price, if I was aggressive out of that zone, I would have been short at 53, right? Well, I was watching it, and then the stop runs fired off. Literally, this was the first when it got down to 53. Somebody else was shorting it at that price too, or puking. That wasn't threshold, but the minute I heard this, and I did eyeball it, and it was just like running away. I should have just jumped in because that would basically be trading off of this zone. But then, because it's a new event, I can now trail my stop based on this zone, and I'll go an ATR above that zone. So, the point is, if I was like paying attention, and I should have been for how big this sell ice was, I could have just jumped in. This is a variation. Don't get confused. This isn't my normal trading style. But the thing is, like, if you love a market, like, so if I would love to short here, well, there's a way where you never get, if you're waiting for a retest of the zone, well, one, you're not getting filled there because it never did that. But if you're like, okay, I want to be aggressive, and then the way I trade is I draw a new zone based on the newest volume event, right? Well, as this thing moves down, you could be getting volume event, volume event, volume event, and you're never in the trade because you're always reverting to the newest event, right? So my point is, if you love an area and you get a new event, you can still get in and then just trail your stop based on the new event, right? And then I could have done it again. I could have gotten aggressively here, and then there was more setups. There's another one here. So this was an incredible trade that I missed, and you can see here. This is some more huge sellers. If somebody's selling the bejesus out of gold, you don't usually see this kind of, especially icebergs. There's natural gas numbers coming on here in 5 minutes. Let's just draw this on here. Nothing's really, obviously you'd be hearing events fire off in the equities. You can see on the on chart too, it helps you draw your zone. So you want to take your bubbles off the screen. I talk about this all the time. Take it off the screen, get your last price line on. I'll show you that here in a second. And then you want to use your cursor and find where the spike started, right? But you can also see this black line, that is where the sell ice was. It's on the on chart SI indicator. I draw my zones off of the sub chart, not the on chart, but it just line, and it can just incredible information. I mean, it's to know, one, it's one house that's basically selling this. So that's interesting, right? And then it helps you draw your zones. But so I follow the prices in this spike, and then once the spike ends, I incorporate every price that happened in the spike, right? So that looks like that came down to there, right? And then you had somebody came in and was swiping it on top of it. So that's those bubbles, sweeps. Bruce doesn't like when I call them swipes, but we call them swipes in the room. But that's important information too. Like, especially if you're in a position and you're seeing swipes the other way, you're like, what's going on here? And you can actually get out of some when you see stuff like that. But all right, so that would be the zone. So you can see here, I could have caught this thing. I missed this trade too. So this was, let's see. Okay, so this makes you feel a little better because it came back. So if I was short, say I was short from that sell ice way up here, right? And this is what, 200 tick move straight down. This is the most recent volume event. Actually, it came in again here. Hold on. Take that back. So this is what you can see. Look at this. This is one house, right? You had 500 here. You can see this line, and then another, whatever that was. It was probably over 200. It was another 364, and then you got another. So this is like another 1,300 sell ice. So this is a major player, and I will promise you this whoever sold it here, sold it up here. This is the same person, because you don't see. I don't want to say person, same entity. It's a firm, obviously. You don't see this type of size in here. It's pretty good information to know, wouldn't you think? That another. So overall, you've had almost 3,000 sell ice today in gold. Like, that's unheard of, right? Pretty good information. So that came down to here. Here's my hotkeys, handy dandy hotkeys that I have set up. All right, so that's the most recent zone. Okay, so I incorporated, I usually will revert to the most recent event, but I mean, you can see this is one house and it's just one right after another. You incorporate all of this, especially for the position trading that we're doing. We're doing two types of trade in my trade room position and ATR reversion trades. I'm not going into that in the webinar. If you want to learn that, come to my room. You get the spreadsheet and everything. But so if I was short this, now what I would do, one, I go in here and enter the values in, because I can still actually go short this market if this fails too. So it's 1339.4 or 1939.4 is the top of the zone. And then the bottom of the zone is 51. That should be exact. I don't know why that's not. Should be 51. So it's 19. Your ATR, this helps you judge the volatility, and it's the core of, you have to adjust to the volatility that day. Talk about it every webinar I've ever done. I make fun of you guys that are using static stops, because I actually should make fun of you. I should feel sorry for you, because if you're using static stops and you know exactly who you are, I like to risk 3 points when I put on an ES trade to try to make 6. As you're not, you have to adjust to the volatility of that day. Like right now, the ATR and ES is almost 8 points. If you're putting in 3-point stops, good luck. You might get lucky, but overall, you do that all the time. When you're putting in 3-point stops when the ATR is elevated, you're going to get stopped out just on random rotations. It just makes no sense. So we have a system based on these volume events that I will place based on the ATR. So you can see here, for instance, if I'm going to go short on this new event, which I might, it's telling me, based on my zone prices, based on the current ATR, which is 36 ticks every 5 minutes this thing's rotating. If you're using your 10 tick gold stop, good luck. You're going to get stopped out probably 99% of the time. So anyway, if I short this, I short at 11, I will stop out at 43.4. So that would be, so say I do go short this zone, and this has not gotten an ATR above, so this is still a potential short setup. Stop will be up here. Then I would short at 11, right? So yes, this is a pretty big risk trade, but one, the volatility is telling me that if I'm right on this trade and the size that's coming in, that I can get multiples on this trade. So it doesn't matter what I'm risking in points. So in this point, point wise in this trade, I'd be risking from entry to exit 123 ticks. Yeah, that's a lot, but it's not a lot today. This it's based on this ATR, right? So all you do is you cut down your size, and that's what we do with this position spreadsheet. And actually, I got to change this because I've been getting smoked lately, and that happened in trading. So this doesn't matter. This is not static. I'm changing. This is what you change, not the points you're risking, how much you're trading, right? So I could put on 1.5 gold contracts, which is not possible on the big, or 15 micros. Guys, there's nothing wrong with trading micros. Trade micros, and I highly recommend you trade micros because it allows you. Remember all those areas that I said that I get out at. Well, if I say I round it down and I just put one on, well then it's all or nothing. So then I got to sit there and try to hold it for a bigger trade, and I'm not allowing myself to get out in important areas. If I had 15 on, I can get out of 5 at, like let's just look at some of these areas that I potentially get in. Oh, by the way, oh wow, I can't believe that happened. It must be stuff that I'm trading, of course. Let me get out of this. I forgot to put my stop in. Surprise, surprise, by the way. You guys surprised where this headed to? I was hoping we could get maybe a little move down before it came up and tagged that liquidity, but that's it's simply amazing. I was telling my trader room yesterday, if you just brought up your chart every day and you found the markets where the liquidity was basically, it's not always clear cut, right? A lot of days I'll pull up some markets and you'll see liquidity. Well, that tells you more. It's probably going to be range day. When you pull up a chart and you see nothing but liquidity on one side of the market, and you just waited for trades in that direction, I'm actually going to do it with one of the Apex accounts. So what I'm doing now is a lot of these strategies, because I've got about 5 million things in my mind that I want to try, and it's really hard, to do everything on one account, so on and so forth. So I have these different Apex accounts that I have separate strategies, right? So the one strategy is going to literally be, I only take trades. Of course, this is the driver, but I will only take long trades if I see the rest of the liquidity that way, right? So that right there. So in this instance, I would have never been short this market because I'm like, nope, I'm only taking long where the liquidity is. It is is we've been talking about this since before the SI indicator. And I'm in stocks, it doesn't matter. When you see that liquidity, it is a magnet, and the market is headed up there a lot. Sometimes it doesn't get there that day, but it still gives you a direction to trade. I'm telling you, if you just use that alone, if you learn anything from these webinars, then just follow liquidity. You could be a professional trader just on that. You got to be patient, right? And that's very hard. It's very hard when you, especially using this, right? And this is one of my weaknesses too. I was talking about this yesterday as well. It's like I'm having a drawdown as well. The markets have been hard, but when I'm on the webinars and everything, I'm taking these trades because I get giddy when I see this stuff because I know what a powerful edge it is, right? Why did this not fire? Is that my volume turned down? Bruce, have you been talking or anything? Because none of this fired off.
No.
I didn't hear any. I didn't hear it. Hold on. Let me make sure my alerts are. That's like 3,000 buy ice. That would have been out of that short when I heard that the first time. Hold on. When it first fired off. Well, I don't know. Yeah, I turned it down. So, guys, this is another reason you want to have this up somewhere in your face. First of all, especially if you're watching multiple markets, you get to a point where you hear it, but you're not listening to it, right? So it's like you'll hear it, you're like, yeah, 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 yeah. When you have this up, you can just be like, oh wait, I'm missing, stops. What was this bias?
Scott, can you show us where you find that?
Yeah, I was just about to do that. So just go to File, Alerts, and then that'll pop up. So you have audio. You set your audio up. This is based on the SI indicator. You can do, on the sub chart, you can do it for the on chart as well. I don't have it for the on chart, but you come in here and then you put in, this is for the text alerts we just looked at, and then check this, and then you can put in, this is for bonds obviously, but you put in what you want it to read to you. You can put anything. You can say, heads up dummy, you're a moron, stop making mistakes, whatever you want. It's pretty funny. So that's how you get the audio alerts. So anyway, the minute I heard this, whoops, this is not, no, that's a new add-on that's not out yet. The minute I heard this, I would have been out of this trade. So I just basically cost myself 14 points because I had my volume down because I think the squawk guy was chirping a little bit ago. So anyway, these are brand new volume events. Very important information. I'm hoping this retests. Probably won't, because we bounced. And where do we bounce out of? Hey, that important zone that I said is resistance is now support. Right? Remember we were talking? We were right here. Came right back into it. Gone. These are where this market's going. And now you have a volume of it. I will be tickled if this can come back and retest this zone, but I may have just missed this big time. Right?
For nice iceberg buys EC 400 for contracts.
So I'm going to incorporate all of this in one area. You can see this was 1 ounce too. You see, I use yellow. I'm trying to separate my colors, but you had 500 buy ice, 900 buy ice, 900 buy ice, another 900 buy ice. So you're talking over 3,000 buy ice in this one condensed area. It's about a 3-point area. Is that important, do you think? Do you think you might want to know that? Do you think you can see that on a bar chart? No. And I love these guys. Like, I posted something it was a couple weeks ago on Twitter, on the Twitter channel. And I said something about seeing the
Dow Ice Iceberg sell YM 100 to contracts.
Seeing the an iceberg, and it was like in crude or something. I said something the traditional charting doesn't show you, and some smart ass chime back. You could see that easily in the footprint. You don't need Bookmap for that. And I said, you can see the absorption in the footprint, which we'll look at here. But I said, good luck trying to draw the exact area like this actually came in, right? And we'll look at this in a second. And then I said, and then how do you see like stop runs? How do you know it's a stop run? I can't tell you how many, again, I'm doing air quotes, educators I've heard in the past where they, oh, and this was a stop run right here just because it was the high of the day or whatever. You have no idea if it's a stop run or not. This is 100% certainty when you're using this information. If a stop run, like this was a stop run, it actually was my I didn't draw this zone right, by the way. This is my 6th setup that's been introduced. This is the unicorn. It's called Step Brothers. Bruce named it, and I confirmed that, Bruce. Remember, I went back and I checked the text.
Thank you, Scott. Appreciate
A
it.
year and a half ago, you did name it. So it's buy stops with buy ice. So you guys got puking and you have the buy ice coming in. So basically, this is one big zone. I'm going to incorporate all these volume events, and I'm praying that this retests so I can get in, because I obviously missed this entire thing, and I'm not very happy about it. One, because it cost me on my short. I would have been out a lot earlier, and I would have gone long aggressively because this is right back out of that zone we just talked about. But shoulda, woulda, coulda. I'm actually even going to color it the unicorn color in honor of the Step Bros and Bruce naming the setup. Name it, or I think that's pink or purple or whatever. I'm colorblind, but I know it's like rainbowish, unicornish. All right, so let's put our zones in. Zone prices in 79 down to 70 quarter, and that's incorporating all of this. This is very, very, very important no matter what happens here. I'm hoping this retest fails so I can go long, but if this comes back and melts right through, that's information as well, right? Let's put this in. And my short-term memory is shot from all the trauma I have from watching these markets for 41.79. I haven't meditated this morning, so I should be pretty even keel. I probably won't go on too many rants and blame you guys for bad trades, but it happened. After zone, ATR is up to 8.05. So how do I use this? Okay, I'm not doing this. This is exclusive to my room, this ATR strategy. We're doing the position strategy. So this is telling me where I would get in for a long, or where I would get in for a short. My rule of thumb to determine what type of setup this is, bearish or bullish, is when it can push a full ATR away from the volume event, the top of the zone, right? Well, what's that price? That all has to do with the ATR that I put in there. This is the current volatility. So if the market was able to push up to 87, I think it did right now, basically. Now this is officially a bullish setup for me. So if I was going long aggressively out of the zone, actually I could do that. Let me just see where we're at here. Make sure I'm not up against a red lug. I just said I would. Okay, so we are. Let's see if we got new lugs drawn. Come on. All right, so we got new lugs, so that's good because I don't like going long into the lug. What you do see here, there's, hold on, just happened there. So this is a bit of a delta divergence, right? Could anyone guess what is causing this delta divergence, by the way? Anyone guessing? Right, so we've obviously, all this is showing who the aggressor is, right? Who's hitting bids or taking offers. As it's moving up, that means there's more taking of offers than hitting bids. Well, you can see this market was here. It's barely, the CBD cumulative volume delta has barely gone higher as we made new highs. This is a delta divergence. Well, why is that? Yeah, it's good to see. You know, like if you just look at this is where traders make the mistake and get caught. They're like, oh man, somebody's hammering this thing. This thing's going up, but the volumes. I want to be a seller. Well, yeah, they're hammering it. What did they hammer into? I don't know, 3,000 buy ice. That's pretty important information to know, right? That's why CBD and the footprint are not the whole story. So you've got. I mean, we're using the footprint more and more in my room just to help with these areas. But this is the key, right? So yeah, CBD is going down or not going up. Well, it's because these sellers were being aggressive and they got a mouthful of about 3,300 buy ice, right? So that's really important information to know. Like let's look at the footprint. Let's see. I'll show you something. If we get a chance, I'll show you crude yesterday. Going to be my newest playbook. We'll go over this current playbook that we're using too. Trying to add one a week, even though I'm behind on that. All right, so let's just take a look at what the sell ice looked like, right? So this is using the footprint, right? So yeah, you can see there's definitely, actually I take that back. So this looks like, so you wouldn't see this, right? So if I'm watching this, so CBD is doing this, that means they're hitting bids, they're not taking offers as much. But if you look at the footprint, you're like, well, wait, there were 20, and this was all the way from 57, right? So this is showing you 26,000 contracts traded. This is a 10 tick reversal bar, so 2.5 point reversal. Once it reverses 2.5 points, it draws a new bar, right? So this is showing me 2,600 buyers. This was a little bit of selling. Well, where do you see that iceberg in this unless it's up here? No, it's not. This is happening right now. So this is my point. Like, this doesn't show me anything that there's an iceberg in here, right? This iceberg came in. This 3,000 came in from 70 up to 79, right? Where do you see that here? This is showing me actually. First of all, it was from here to here. See how this is like convoluted now? So if I go over to here, it doesn't even look like really anything happened, right? So if I'm going from 70, 79, how do I have any idea what just happened there? That's not showing me anything, right? So this we're using this for certain instances, but there's time and a place to use this. It's not every time. Like a lot of traders will see, and there's a lot of information on the footprint on the internet. Some capable traders, and listen, it's volume. Obviously that's the driver of my trading, and I believe it's important, but it's not just use it every time you see it. So this would be a good example. Like traders will see, oh, hey, there's 26,000, there's 2,200. I'm going to go long here. I'm going to risk below the bar. Yeah and no, right? It's like just in random areas, it's not a big deal. But if you can use this stuff on top of the SI events, then you have something, right? But my point is, you just do this every time, you're not going to make money. Like I'll find overall, right? And there's a reason, the main footprint company, and I was friends with the guy who was Market Delta. That's what I use. I was introduced to this. This is what I tried to stay in the game with back when when I was making millions of dollars and it stopped overnight. Couldn't make a dollar, right? Dr. Brett Steenbarger came to me and said, hey, you might want to check out this program called Market Delta, the software Market Delta. And it was a footprint just like this. This was before there were footprints. And I tried to use this for years and years and years. Remember, like the SI events are based on my experience as a large scalper, right? Well, I still had that experience when I went to the footprint, and I could not make money using the footprint consistently, right? So there is a time and a place to use this, right? But and I even have that part of this is the DAS setup we'll go over, right? I even have some instances where it's important, but it's important when you can put a volume event there. Like for instance, this one, talk about how stop runs are, usually not real buying, real selling. I mean, in this case, it's not real buying. Yeah, it's buying, but are they guys initiating positions or are they puking? Well, yeah, you can initiate a position with a stop, but most of the time that's a retail puke. Well, that you already have that information. Hey, it's a stop run, most likely to fail because it's not real buying. And then this is, for example, when you use the footprint and you look at this. Now I know as that market went just above that stop run, here's the stop run. Get a different color here. Here's the stop run, right? And then as it made it higher, I already know that's not real buying. If you're looking at a footprint, you think it is. Another reason why it's just not, the footprint is not end all be all, right? You don't know that's a stop run. And then it goes higher, net sellers. There's net sellers here. Went higher again, still net sellers. So I already know that's a stop run. 100% certainty it's a stop run. Not from the SI indicator. Then I know there's net selling. Once it gets below there, it's go time, right? And this is what this setup is. We'll go over. Hopefully, we'll get one of these, and you can see. And then this one, when I get this setup, this distinct setup, and you should have this playbook, and this is what we're working on in my room. Everybody in my room needs to be developing playbooks, exact setups that they look for, right? So this is what we look for. In this case, I get in aggressively. So we've been talking about ATR. This one, I would not wait for that because of everything I just talked about. I'm in aggressively. Stop goes below. You catch the monster move. This one even did it. I didn't even take this trade at the time because this is right when I was developing this. Even though I've been looking, I have about 40 playbooks in my head or more that I'm going to start putting on paper for my room. But at this one I was watching at the time, and I'm like I was afraid of that. And this is another example how it always doesn't go right to the liquidity. So this happened. It did this. The day ended, messed around the next day, and then finally tagged all this the very next day. So that's an example of it always doesn't go, and it was real close to this liquidity too. So yes, great, jumping back and forth here. It's very important to eyeball this liquidity, but it's not always, the volume event supersedes that. So I got the volume event, it was short. And then you can get out and then look for longs back into that. And you would have made a killing on that the next day.
Yeah, Scott, just a note, like like yesterday JTrader showed a really great, very simple visual chart, and side by side with a candlestick chart, and it just showed like the stair stepping, kind of spoofing or lowering of liquidity of a larger player, and then they pull and absorb on the other side with the buy limit orders, and the market rockets to the upside. So it's not, you cannot see that. It's just not available in that candlestick chart. So that's where you can get this edge. And then you just showed it in the footprint chart. The footprint chart didn't show anything regarding what really happened there. And
Right, and the
CVD
doesn't show you liquidity. It shows you what traded. It doesn't show you what, where the liquidity is, so on and so forth.
Yeah, and then the CVD was, CVD is really blunt instrument or indicator, just buy minus sell, buy minus sell, buy minus sell. However, something is really weird. The way you pointed that out, it was excellent. Like, what's going on here? Well, there's another, it was just being totally absorbed by ice. What more do you want to know? I mean, like, there's your answer and to the quandary, what we're talking about here is just getting much more transparency into what's happening in the markets, and that's actionable.
Right, that's the whole point. It's actionable, and
Right.
it's so actionable. I mean, you can draw the zone to the tick, and that's what I do. Right. So again, this I could have. First of all, I didn't see it, but if I saw it, then I have to make the decision for myself. Am I going to be aggressive or not aggressive? I potentially would have been aggressive based on what we talked about right at the beginning of the webinar. Market opened up, it was up overnight, pull back into the zone. Then we see the buy ice, go long aggressive. Again, what's aggressive? It means the minute this moves in ATR, I'm using ATR plus 10% out of the zone. So you can see here on the spreadsheet. So the ATR at the time, I will change this here in a second because I'm sure it changed a little bit, was 87. Well, where is my aggressive entry? It's an ATR plus 10%, which makes sense because it's 7.75. That's 10% more of an ATR. So I would have been in an 87.75. So the whole point is, as you understand how to use these volume events and understand how to draw them and know how to trade them, again, I recommend you, especially if you're first starting, you use my method especially with ATR, but it doesn't matter. You can use this however you want. Point is, you would get, if you love the area, you're like, oh, this thing's going to riff from here. Then you're in immediately when it could push outside of an ATR. Why do I do that? Because there's algos that snap these markets back when the market moves away from a volume event like an ATR. So that's proof to me, if this can get outside of the ATR, there's something bigger happening, and it's running over these snapback algorithms, and that's why I force it. And I've learned this the hard way, right? Everything I'm doing, I've learned over, like if you get my course, the 2020 side course, I'm talking about getting in like right when it breaks the zone, put your stop below zone. Yeah, it's great for risk reward, but I did that enough where it would do this, and keep stopping me out. So then I've moved to a more logical way to adapt to the volatility where I'm forcing it. And again, I used to say, okay, I'm going to get in 50% of an ATR, I'll get in. And then that would happen. Okay, 60, or I get ticked. I finally said, okay, I'm going to push it just outside an ATR. Yeah, you've got to risk more points. I'm okay risking more points to make sure it's a more sound setup versus just jumping in because I don't want to risk a certain amount of points. That's silliness, right? So if you do that, you can, again, trade these however you want. You could say the minute that gets out of that zone, oh, I love 3,000 buy eyes. I'm getting in the minute it breaks there. Well, yeah, this one worked out perfectly. You're only risking back to the bottom of the zone, and you already got yourself a 15-point trade, right? But from my experience of trading these, this is the best way to trade them. Wait for an ATR, retest failure, or if you want to get aggressive, then the minute it breaks out an ATR in 10%, right? That's how I trade it. You don't have to trade it that way. You can adapt that, right? And you can hear this thing going nuts. These are my favorite days. I hate when the market does this. So anyway, I missed this trade aggressively. It's still not over. This thing could stop, come back, retest, fail, then I'll go long. Other than that, I'm looking for a new setup.
Stopped by HG, 203 contracts.
This is Tick Strike. Again, you can get all this stuff on my website. There's discounts. Click on the banners to everything on there. Tick Strike's one of them. This could drive you crazy. It's very important information, but when you have a position on and this thing's going nuts the other way, it is not comfortable. I liken it. I call it waterboarding. I've never been waterboarded, thank goodness, but I'm assuming that's what it feels like. Watching and listening to your pain. All right, so. This is good information from the footprint right here. What I'm mainly watching. Yeah, I can obviously see the buyers are. It doesn't take a rocket science. You can see it in the bubbles. Like, yeah, they're buying it. I'm paying attention to this type of volume. When you can see like it's 2,700, 2,400, 6,000, 10,000, 3,000, 26,000. That's important. These are vested traders in this area, whatever way this breaks, right? But I don't trade this on its own. I'm waiting for a volume event, but this is just good to know, right? So when this comes back down here as well, this here was 35,000. Whoever tried to sell it didn't work out so well for them, and that was part of that. I don't even think that was part of that bias. Bias was down here. Point is, this is all an important area. So what I could see this market doing is coming back. And I know I had huge volume here, but then there was big volume overall, and then I know I have my huge buy ice area. So this is an extremely strong edge for that type of trade, right? So if this does this, and do you see here, right? I'm not chasing this market. I didn't get in aggressively for a reason. And now I wait. Now it's either this comes back, retest fails, and that's a very, very high percentage trade, or something new comes in, then I can get in then. But I don't chase. You see how this can make you a better trader just by not being like impulsive, like, oh crap, man, this thing's these are going crazy. I got to get in. Yeah. How's that working out for the guys that just jumped in here, right? I sit here patiently like a sniper waiting to blow someone's head off. Again, pardon that type of talk for the ladies on these webinars, but guys, it's us versus them. Like, what do you think trading is? It's a zero-sum game, right? You're trading. Someone's trying to take your money. You're trying to take their money. That's what this is. It's the ultimate competition, right? So, if you think otherwise, so you probably want to be, a sniper waiting to blow some heads off, right? Because they're trying to blow your head off. Just think of it that way. So anyway, I'm being patient here. This is also a spot gamma level where this could fail, and then I will watch this. Hold on. What happens if that happens? That's incredible information. Where would I have ever seen something like that? Let's see, yesterday in crude. See if I can find this real quick. We're just talking about. One second, I can't do two things at once. Let's see here. I screenshotted this. 1 second, guys. Wait, sorry. Wrong month. Yesterday, Wednesday, not. Here we go. Okay, so this was yesterday. This was on this balance breakdown in crude. So this is actually another playbook that I'm setting up for the room. So obviously, balance breakdowns are not hard to spot, right? We were talking about these earlier, breakdowns, right? And many times you get the jukes. Well, guess what? Yesterday was no juke. Yesterday was this move on ridiculous relative volume, which we'll look at. But what could have signaled this, and that's what I'm talking about, if this happens with this ESI zone, heads up, because this is exactly what happened yesterday. So you see, this is crude, and this was all in that balance area. It was right at the bottom of the balance area. Someone came in and it's like, oh, I love the bottom of that balance. Right? I'm going to buy that. Some firm, some big trader that was right at the bottom. This is a small balance, but this is a balance area. This is a 2-day balance area, right? These are traders placing bets. Some guy came in, firm, whatever, and I drew a zone here today off of that move because it was directional conviction out of there, but someone tried to buy it there thinking it was going to do that again, right? Well, it originally moved the ATR away from there. And this is why I wait for ATR retest failure. So you got the buy ice. I think it was like 200. You can see it there. This was after the fact. This was this zone here, right? Here's your ATR. Oh, great. That's a bullish setup, supposedly. Well, did it go ATR retest failure? No, when ATR die. That is, even if you didn't trade this, just understanding how the markets react to these areas, this told you, heads up, man, something is up. That's the bottom of the balance. This thing should have done that. Instead, it melted right through there. And then when you add in, let me show you guys this and then I'll answer some questions. This is very important information to be looking at. Hold on. No, I have to bring up that chart. And I know I thought I screenshotted that. Yeah, here it is. Right. This told you, watch the F out. Something. Okay, so let's just look at that. Oh, damn it. I got to keep going back and forth. Hold on, let's see if it's right here. Please be right here. All right, cool. So that buy ice was right around 78 to 78.15. Right? And it was at, I'd say 10-ish, 9:05 my time, so 10:10 Central. So you had, it's probably right around here. So you had ice setup, everything looked fine, and then you can't see it on this. Actually, it was probably here. Yeah, you can. I'm sorry. So that was this. You got the buy ice and went right through that zone, and then that. So when you see balance breakouts with that, you do not want to be. You want to be jumping in. Somebody was hammering this thing. Yes, there were buyers. There has to be buyers, right? There has to be someone in the other trade. So somebody was, the aggressor was the seller, and we'll look at this on the CBD as well. But so someone was buying this, and they were getting run over, and it was like 4, 5, 6 times volume. That's when you want to go with the move on the breakout. So my whole point is, this happened after that. So this right there said, heads up, something's going on. And then when you start seeing this, it's like, and there were setup, and things just started getting run over with the setups. There was another one here, right? These were all broken ice setups. So this is actually going to be the playbook. It's going to be balance breakdown through broken ice setups. So the point is, guys, this is what I'm talking about. This is stuff that you cannot see otherwise. So we're using everything in conjunction. But the most important part right there was telling you, hey, heads up, that volume setup failed. I didn't trade that, but that gave me information, right? It was like, that first setup, I didn't trade it because it was a long setup. I didn't go short off of it, but it was like, wait a minute, why did that melt right down through that zone? And then it told me why. And then this is what it looked like on the CBD, right? So this was this. So the setup was right about, looks like right here. That was the juke right through it, and then they just started smoking. They're already selling it here. This was already heads up, like they were hitting bids the whole morning. Because this is how you use everything in conjunction, right? But it's not end all be all where, every time you see a delta divergence, right? So you could have been like, this isn't a good example, but just trust me when I tell you, you see delta divergence all the time, and you'll see something like this. It doesn't mean you just jump in every time you see a divergence. This thing could keep going. But when you have volume events and those types of things, then it's go time, right? So I went off track a little bit there, but hopefully you guys understand what I'm talking about. All right, so my point is now I'm just waiting for this retest of the zone. So say I get the retest and I'm waiting, but it's not just the retest. I wait for the failure. That's what didn't happen in crude yesterday, right? If this market goes like this and right through here, well, what are you guys going to be ready for? 0 today, right to 0. Any questions, Bruce? And if that doesn't happen, then I'm waiting for a new event. I'll go long in a new event. We are approaching another important prior zone, so I will be cognizant of that. So this is a very important area too. Where this, so say I did get long aggressively off of this setup that I just showed you, that 3,000 ice, I would be watching very closely to get out of some in this zone. I don't know why I don't have the values. Let me redraw this so we can get the values of this zone.
No questions, Scott. I mean, I'm just kind of throwing it out there. Does everyone kind of understand what we're talking about there with the CVD and footprint, and then how you cannot see? It didn't offer the transparency. So like you look at it and you go, well, something's a little weird or something's a little wrong here. What's going on? And then to get that more kind of that deeper insight. So if let me know if you have any questions, we can go over it. But I mean, really good catch on that, Scott.
Thanks. Of course, everything I do is perfect. All right, so you can see here, this zone is 4203 up to 29. It's a large zone. Doesn't matter. It's like, this is just kind of like using your static stops. Like, I wish the zone was more narrow, right? But this is what it is. What is this? Well, this first of all was a gap down day. That's directional conviction. Came back. What did it do again? Small selling tail. Huge directional conviction that ended up leading them ultimately to this huge down move. This is a very, very important zone. This is basically, this is a regular trading hours chart, so it's not showing you overnight trade for a reason, so I can see gaps and everything. But this is one straight move into this zone. If I was long into this, I may well be if it comes back, retest fails. But if I was long, I'd definitely be looking to get out of most of them here. And I can tell you, it's on this webinar, and we get up here, and I get a short setup, I'm shorting aggressively, because what an important zone. So remember we talked about at the beginning of the webinar, you got to decide whether you're going to wait for ATR retest failure or you're going to wait for you get in immediately. If I get a setup, and there's probably going to be a stop run, it might even be the Dada playbook. I name my stuff funny names to humor myself and to remember them. We may get the Dada, and we already have part of it, right? So let's just get ready. And this is why you want to be knowing where you're at in your markets. You doing your pre-market prep, you need to know all of this stuff, so you're not like scrambling to say, oh wait, where are we? I gotta figure. There's a stop run right there. This is data setup. You should already know all this before the markets, and then when it gets up there, so I already know. So here's the data. What is data? Dumb and Dumber, aggressive opposite delta. Right. I need to see for this playbook to fire off for me to trade this playbook, and this playbook is an aggressive entry. So if I see the volume setup, I already know. If I get my parameters, which is a diverging delta, we'll go over this here in a second, that I'm going to be in. The minute it breaks an ATR and 10% out of the zone, I'm in. So I'm already waiting for this. And that alone is about to happen because I'm almost positive we're going to get some stop runs here, right? So what are the components here? I need to see, we have to be extreme standard deviation from VWAP, right? So this is VWAP, this is one standard deviation. This is they call it daily value area DVA. This is 1.5. This is 2. If this moves up a little more, this will be like 2.5 or more. I'm looking for a stop run. This is diverging delta. You see how the delta is not moving. Does it mean I'm just shorting right now blindly? No, I'm waiting for a setup, but I know this is happening, right? And all my pieces would be in place for the Dada setup, right? So I just sit here and wait. And then, so the lugs, important zones, these are not part of this setup. But when I get that is confluence, and that would turn into an A+ trade where I can trade bigger size, right? We never want to be risking more than 2% on a trade, or 6% in a day, I should say. But you can trade more than the normal 2%. I tell you guys this all the time. When I was trading with SMB to trade stocks back when I got back in the game in 2017, They ground their traders if they get an A+ setup and they don't trade bigger size. So my point is, you're not risking your overall size for the day or your risk for the day. The most you should be risking is 5 to 6%, right? But if you get a setup, like if I get a stop run into that zone, I know how important that zone is, then my dad playbook fires off, I'm trading at least 4%, so I could trade double size. You know what I'm saying? But I've got to know, hey, if this ends up being a loser, which it could be because trading is a percentage game, right? Then I only have one bullet left in the chamber, or I'm going to hit my limit for the day and I'm done. You've got to be able to accept that. Again, set it up with your broker. So if you hit a certain amount, you're done for the day. But it doesn't mean you can't fire on a trade that everything is lined up and it's like it's go time. That's what you want. You don't get them very often. And when you get that look where everything is in line, you need to fire, right? So I already know all this, and I'm just waiting. I'd be willing to bet. I usually bet on the liquidity, but I'm willing to bet this goes a little bit above here. You're going to see a monster stop run. It's probably going to be like 1,200, especially for all these guys that sold down here in the Mr. Unicorn setup. They're going to be puking. They're holding their breath right now, and you're going to see some major puking here probably any second. So let's just go ahead and enjoy that while the waterboarding fires off. But now I'm ready. I'm ready for the stop run. I'll draw the zone, and then when it moves back out of there, I'm shorting it. I'm really mad that I, didn't get a retest of the zone, but it is what it is. I wasn't willing to go long there aggressively. There's NQ.
159 contracts.
Speaking of which, important zones. Hey, look where we're at. Hey, look at that. That is a straight. It says only 800-point move straight into the zone. Yeah, I'll be shorting that. That's probably a dead-ass setup as well. And it feels scary, right? You're like, oh my God, they're buying. These are going crazy. I don't want to short this thing. Those are the best trades. The trades that feel the worst are usually the best. So we already got, this is going to happen any minute, and I don't like this liquidity up here is the only problem. But again, that doesn't stop me from taking the trade. Doesn't mean we're going there right now. I am cognizant of it. So this was, let me get this CBD off here real quick. That's not CBD. What is this? Oh, this is the new indicator. So that started here. Swipe started right about there. That's the spike. 256, 150. So this is already failing. So I better hurry up here. 32 down to 20. 2675. We come in here, put our values in. I don't even know the handles anymore. It's gone up so much. What did I say? By the time I figure this out, I'm probably going to miss the damn trade. And actually, it was higher than that anyway. They had some kind of fast way to draw these zones. On my wish list. I don't know if I've ever mentioned that one. That was a little jab at Bruce. 1280, 832, 25. Early birds. Say I get this. I know they're working on it. They're still working on it, right, Bruce? That didn't get put on the back double back burner. The zone drawing tool.
Yeah, I kind of explained that to you a little bit. It's a core issue. It's a lot harder to
find a way
to. It really is. It changes. It means a whole new, different version of Bookmap has to be made. Anyway.
Well, I got a developer working on it, so if he figures it out and your guys don't, then they're all fired.
Yeah, I mean, well, you could do it. Maybe you could do it as a separate add-on and using the API. And that's the direction we're going with the architecture, just so anyone has any questions.
All right.
So
drawing them by hand and complaining.
Hey, I'm not trying to make an excuse. I'm just saying, like, it's because it's a core issue. All of a sudden, it's something different. Bartos is asking, what do you guys think about Groundhog Day? Do you want to incorporate that into your daily bias?
Well, we have indicators all the time. So we have the dog bark indicator when a dog's barking outside my window. We have the garbage truck. So funny is there was a guy in the room the other day, a newer trader, and I have all these funny names, right? So I'm literally, the garbage truck was coming by. I'm like, oh, here's the garbage truck indicator. And it was a joke, and he really thought it was a setup. He's like, what am I missing? What's the garbage truck's So I may actually name one the garbage truck. All right, so here we go. What do you see here? This is Dada. Dumb and Dumber. Again, this is this exact playbook, right? There's the Dumb and Dumber I just drew. We'll make sure the footprint's here, but I have, we want to make sure it's algo guy, extreme standard deviation. I'll get an algo guy too, but I'm sure this is, it's extended, so this is good. You can see here's that zone drawn. It's in the zone. That's just extra. I don't have to have that. That makes this an A+ trade. So let's see. By the time I come back here, all right. So what is my aggressive entry? So this is when I'm entering the zone, out of the zone aggressively. What's that price? 94.75. I could put on 1.29. This is an A+ setup. We'll go over it again. Why? I'm going to put on double. So 2.5, basically 2.6. I'm going to put on 3. I'm risking, $3,600 on this one trade. If I lose this, I basically have one more bullet left to hit my limit for the day. All right, so 94.75. We're going to put on, I can't put it on here. Sorry. We're not going to do that anymore. My bad. All right, so guys, it doesn't matter. You don't need to see me click the damn thing. I personally, on my other accounts, I am going short. You saw the price, 94.75. If I get filled on that, my stop's going to be a full ATR and 10% above there. All these prices are there, right? 64
And
quarter.
not a trade recommendation.
This is what I'm doing. You can do whatever you want. You can fade me. The way I've been trading, the way I've been melting down lately, it'd probably be a good idea to fade me right now. Just kidding, but guys, listen, I'm human. I understand it's a percentage game. It doesn't make it feel any better. Trust me. You should hear me in my trade room lately. All I do is complain and bitch. It's like I go down those rabbit holes, and I'm much better at it than I used to be. I used to literally break stuff nonstop like a 2-year-old. But it still doesn't mean it doesn't affect me. I'm fully aware of the game. I'm fully aware this is a percentage game, right? I showed you, and I don't know what I did with it. Right? I'm all well aware of this. This is tattooed on my forehead as well. It doesn't make me not human, right? It makes me. I still get pissed. I'm competitive. When I go out and play golf, I know there's a chance that I'm going to shoot like crap. I know there's a chance. I play in tournaments all the time. I know there's a chance that I'm going to get beaten down. Do I leave there? I'm like, oh, well, gosh, gee willikers, that's okay. I'll get him next time. No, I'm pissed. I get pissed off at that just like I do this, right? It's like I understand this is part of the game, just like I understand I can go out and fire a 90 out of nowhere, right? I don't have to be happy about it, but I accept it, right? So that was a little bit of a tangent. So the point is, I was saying if you want to fade me, because I have been not trading well lately. I've been making a ton of mistakes. Things have been kind of weird in this just trading, right? It doesn't mean I have to be happy about it, and that's why I bitch all the time. But I do understand, again, you guys should have already had this screenshotted and tattooed to your head while we've been on this webinar. But I need to understand, and this is the exercise, this is how we even came up with the ATR trade that we're doing in my room. The purpose is to convince yourself that trading is just a simple game of probabilities. If it's a probability, that means you're going to have losers. At the micro level, the outcomes are individual edges, are independent occurrences. At the macro level, the outcomes over a series of trades will produce consistent results. I know I have the edge. I know there's going to be losers. I don't handle losers well, but I know there's going to be losers, right? You just have to be honest with yourself on if you are a mental midget or not. And I have been a mental midget lately. And I try to get better at it. And that's exactly why, today, for instance, I meditated. I should be doing it every day because I just know, especially if I go day after day after day after day getting my head kicked in, like it feels like the world's ending. And this is from a seasoned trader, so I could just imagine someone who's just starting out, so on and so forth. So just know it happens. It happens to the best of us. I've been doing this a long time, but I'm still a mental midget at times. You got to catch yourself, so on and so forth. So that's a long rant. I was hoping there was a dad setup in here. That kind of sucks, but there's nothing in here, so I'll still take that if that happens. But right now, I just put the trade into my other account. Actually, I'm putting it in this other account. So I have multiple Apex accounts that I'm trading this exact setup I'm trading. We'll go over Apex here in a second. It's highly recommended for you guys. Let me put in this one. I already missed it, of course. Missed the fill on that, so short there. All right, so this is my trade. Again, if you want to fade me, go for it. Go for it. Right? So I got short at 94.75. This is my dad setup. Stop run. Diverging delta. We'll look at that here in a second. Again,
Not a trade recommendation. Sorry, Scott.
I just said I did it. I told people to fade me if they dare. Right? I'm not recommending you do anything. I'm recommending you learn why I did it.
You're even challenging the fade me. Go ahead. Come on.
Right.
I dare you.
Well, that's what I'm doing when I put on a trade. I'm daring the I'm daring the opposing traders to fade me. Right? That's what you're doing when you put on a trade. It's a zero sum game. All right. So there's a new setup here, and there's buy ice here in. Yeah, so this is getting interesting here too, right? I'm not trading this aggressively either. I'm going to wait, just like I was waiting for this one. I'll wait for this one. We'll draw this. But I will tell you, if we draw this zone and this fails, it turns into broken ice, and this gets through here, Armageddon, zero. Going to zero today. That's not a trade recommendation. We're going to zero. Don't sell it and hold it and say Scott told me we're going to zero. I'm being sarcastic. I'd like it to go to zero because I hate when this thing goes up and everything's seemingly okay with the world when it's not. But anyway, just be ready for like that crude trade I showed you. Something's up. Watch out below. Right now, though, I'll go long. I'm not going to go long aggressively. Now I will continue to be tortured. So anyway, I'm going to be an ATR at 10%. This is my short that I personally took. I am out at 64.25. So that is an ATR plus 10%. Let's just make sure this is current. Yeah. It's 29.53. Same. I'm out at 64.75. Let me put that in here because I don't forget, and then I'll look up and we're 300 points higher. 64.75. 64.75. One issue doing it on these other ones. You guys got to sit here and wait. All right, so let's draw this setup. I'm obviously hoping this turns into broken ice because I'm already short NASDAQ, and I'll short this too, and then I can play. We'll play free falling, or we'll play highway to hell. So something up on music. I have little positions on in equities. When I was at my trading firm, one of my good friends, every time he would get long the ES, he would blast the Jeffersons. Moving on up, you're old enough to remember the Jeffersons. He would literally blast it throughout the entire trading firm. It was hysterical. So if I have multiple positions on long, then sometimes I'll play the Jefferson song in my trade room. But I may be playing Highway to Hell before we get off here, which would be fun. All right, guys, you got to laugh in this game. I'm telling you, if you're all Mr. Serious, dude, you're gonna lose your mind. So you got to laugh. So this zone was obviously not drawn correctly, right? So this was a spike. I got to bring this down. So I took off my bubbles so I can see. It's easier to see. It's hard to see that. I used to draw them to the bubbles. That was not accurate. There you go. So your zone is a tight 87.75, 85.75. Now we go to the handy dandy spreadsheet. We put those values in to help us determine where I'm going to, not giving trade recommendations, where I'm going to either short it or go long. 41.87.75. And 85.70. My short-term number is literally just, I can't remember those two numbers. All right, let's put in our ATR down to 6.64. See? This is adapting to the volatility. It's not, I'm putting on a 2-point stop, and no matter what. All right, so these are my prices, right? So this market is able to push. So this is the other strategy, but this just tells me if it's exactly an ATR. So if this gets up to 94.50, that setup is bullish. If this gets down to 41.79, that setup is bearish. That's how I determine we've already gone over, if the market is able to push away an ATR from these zones, it's fighting the algos. It's telling me, first of all, it's telling me something, but then if it goes retest failure, and then I get in 110% of an ATR. That's just, again, from trial and error, from trading thousands of these. So I have no idea. If you love this area, you want to go long, then you would get in at I'm not recommending you go long at this price, especially aggressively. That's the price that I would go long if I was getting aggressive. I'm not going aggressive. I will go long if it touches this price, comes back, retests the zone, comes back out, I'll go long at that price. So now I wait. Let the torture begin in Mr. NASDAQ. Pardon my language, but that's what I call it sometimes. If anyone's talking, I know the Fed clowns are on hiatus. They can't just come out and with their tape spot game. I call them tape bombs the other day, which is a good one. I've bitched about this before. I've never seen it where Fed guys just talk nonstop all day long. It's like it just has a complete. It can be in the best trade ever. They say one word, these algos pick it up, and then the market rips the other way. It's very, very annoying. But like I said, that's what markets are. They're not this static thing. You've got to accept. Putin's going to come out and say something like that, like today, right? You're out of that trade, on to the next one, on to the next one. If you have an edge, you will make money over the long term. Did I show the trading in the zone document today? Did I show that? What did I do with that? Show this? Oh yeah, I did about 5 times already. Right? You have an edge that generally puts the odds of success in your favor. I would say real-time volume, knowing where 3,000 buy ice, so on and so forth, is putting the odds in your favor. You can think about trading in the appropriate manner. The 5 fundamental truths. What are the 5 fundamental truths? Anything can happen. Like Putin talking, like the Fed clown saying something. You don't need to know what's going to happen next in order to make money. I have no idea what's going to happen here on this short. I have my rules. I put my stop in. Let it work, right? There is a random distribution between wins and losses for any given set of variables that define an edge. Wins and losses, right? It's just nothing more than an indication of a higher probability. Guys, this is like, please tattoo this on something. Indication of higher probability is that it's 100% this is going to happen. Never. Nothing is 100% ever in a million years. Never has been, never will be. Of one thing happening.
154
I got to set up in crude. Of one thing happening over another. Every moment in the market is unique. So I'm drawing the zones. I know how they usually trade. It's still a unique moment. Anything can happen. I know how they usually trade, and that's what I'm taking advantage of. That's the edge. So take that edge and incorporate it however you want to in your trading. So this was, remember I got in aggressively, so this is looking like it's going to do a retest, and then this is what the reversion trade is that we're doing in my room. It's playing retests of the zone. I don't, I wish this would have just died, but this doesn't surprise me. It doesn't surprise me if it does this. As long as it doesn't get up to my stop price, I sit in the trade, and or an opposing setup. Another setup comes in, then I can trail my stop and or, get out and go long. But now I just wait. Now I get waterboarded. This is exactly why I call it waterboarding. Now I get to watch. Again, it's not on here. It's not up in the trades on. I get to watch the trade go against me, and I get to listen to it. And there's your retest. Over and over and over. The same thing. Probability. All right. So we just heard crude. This was from earlier. The shocking that bounced off of that prior zone. Not 221 buys. Take my bubbles down. So you had a little bit here. That was not threshold. It was almost threshold. You could incorporate that if you want. I'm just going to draw this buy ice. So expand your chart. So you want to get this last price line. Right click. Go to configure visible components. Click on last price. That'll give you this white line. That's actually last traded price. Then you watch your spike and you incorporate all the prices in the spike to draw your zone. So I know that came up to there, right? Actually, take that back. That was probably a little. Actually came all the way up to here, right? See that spike? This wasn't threshold, but this was a continuation of it. So I will incorporate that. So that started here, but the price popped up to here. So I've got to move that zone. Got that. Let's make it pretty blue for buy ice. Try to match the colors on the sub chart. And that came down to here. 96 to 13. Looks like. Maybe. Yes, that's correct. All right, so 76, 13, and 96. So we go to crew. Again, don't email me asking for this spreadsheet. This is proprietary to my trade room. It's very, very helpful. You could do it in your head, but this just I did it by hand for years on these webinars, right? And this is just makes my life so much easier, right? You just put stuff in, and it's just like there's the prices. You put it in, and you let the trade work. Here is 29.4 right now. That bottom is on 96. 95. All right. So now we're on the position trading side. Let's see where we're at first and foremost, right? To determine if I want to be ultra aggressive out of the zone or if I want to wait for the conservative retest failure. So you can see, look what this market's holding. I could be aggressive here on the buy side. Not a coincidence. It's poked a little bit below, and then we put in a buying tail. Now it's moving back out. This is basically a pretty big move down. I'm perfectly fine with going long aggressively here, as long as we're not into a major Ludwig level. Just don't like saying Ludwig levels 85 times in a webinar. That's why we call them the lugs. She even likes the name. She's in my trade room too, so she always chimes in and lets us know when symbols are rolling to new lugs, so on and so forth. All right, so where are we at here? No, we're really special on lugs. We're just yellow is called the directional. So you can come up with thesis based on how it's reacting to the yellow, so on and so forth. Watch the webinar I did with her. It's been posted in this room many times. It's a very straightforward webinar I did with her probably almost 2 years ago now. But I think it's a very good webinar because it's very basic and it helps you understand how she trades them, which is pretty important because considering it's her indicator. Big picture stuff. Let's see here. This is today's trade. I haven't really gone over market profile yet. So you can see, remember we were talking about, what did I say my important areas are that I will like, let's just say if I was short into that area where I get out, number 5, market profile composite, highs, lows, points of control. Where did this market bounce off of? The point of control. What's the point of control? It's just the price in a value area. Value area is 70% of the trade. The exact price where the most trade occurred in that value area. Wow, look at that. Pretty much exactly into the tick, right? So if I was short, I'd see it accepted in here. I'd be like, yeah, go time, and I'd watch closely the point of control. I'm just giving you examples. I wasn't short this, but I'm just saying. Now this is giving me information as well. When a market accepts into a market profile composite, it is a very, very, very high percentage it gets to the other side, right? I can show you example after example after example. If it does not get to the other side and it gets back out, that's telling you something as well. And that's what this market looks like it's trying to do. So I know that it hasn't happened yet. And it's already tried a couple times to get out of here and it hasn't happened. So this is another example. If you're not using volume, if you're not using the SI indicator in Bookmap, how are you trading this? You're like, oh, I want to get long. Oh, stopped out. I'm going to get long. It broke out again. Oh, no, stopped out. Okay, I'm going to get short because we're inside this. No, you're stopped out, right? I didn't do anything. I was waiting for a volume setup. Now I got it. So now how this market reacts to this is going to get some waterboarding going on. Awesome. Get a little torture going. I'll come back to this in a second. This is just being its usual self, NASDAQ self. All right, so just trying to get some different insight and information, right? I come up with ideas, and you should be looking at this pre-market every day. Hey, where are we at? Like yesterday, you should have known. I should have known. And I actually did. I just didn't remember. Bounced right off of there. It's telling it got inside there, but it's also telling why is it not doing that yet? If this gets back out once and for all, then we're probably going to retrace some of this move down yesterday. But you can see this. This is what I'm talking about. If you can find areas, it doesn't need to be my areas. These are very important. You should learn these areas. But if you're trade off market profile, you wait, you get a volume event here at the end of the day. That's the ultimate edge. You catch an 80, 100 tick move into the close, right? It's finding important areas and then adding your SI events. All right, so back to this. Knowing all that, I'm going to go long aggressively. If you can see, did I go long? No. Well, what's this doing? This is actually looking bearish now. Let me get rid of this. It's annoying me. This is from pre-market. This is before Putin. I was trading off of that, and then Putin screwed me. It's like he's screwing the world. I'm not going to get political, but anyway, let's see what that price was. Or what the price is to make that a bearish setup. It was 75.67. Did we get down to 75.67? Yes, we did. So now what is this? I was ready to go bull. I was ready to go long aggressively, right? Did I go long? No. It never got the ATR out of there. Now what is this? A bearish setup. What else is that in line with? Yes, we're still in that zone. So you could either say we're in the zone, I want to wait till we get below the zone, or you say, hey, guess what? Like I just talked about, the different ideas here. When you get inside a market profile composite, the tendency is to get to the other side. This is tried now twice to get out of here. Did not happen. Now we're back inside. Now you have a bearish event. That's the play.
Scott,
I'm not going to go aggressive short this because of the... You're just saying something, Bruce?
Yeah. When you're finished, I have a point. I just wanted to kind of cover.
So because we're in that zone, I'm not, if we weren't in the zone, I'd be aggressive. Why do I lose my damn chart every single time? Hold on. There it is. If we weren't in this zone, this support zone, I would short it aggressive. So say we're just below it, I would short that aggressively. And we're not. I'll still short it, but I need to see my conservative entry. We just talked about this in this entire webinar, and this is what's happening. And this is one of the trades we take in the room, and it's happening before your very eyes. This is the reversion trade. Back to the zone. So if this goes here, 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 then I'll short it.
380 for contracts.
Right, so I'm still in this trade. There's a new volume setup. I mean, this isn't really helping me much as far as trailing my stop. I'd have to actually move it up. I'm just going to, and guys, this doesn't surprise me at all because what did I say? What was I afraid of? Just like the earlier short in the S, because these guys, manipulators, have to get filled first, right? I say it guys, I know it's manipulated because I used to manipulate it. I mean, it's not me like saying the market's against me. You have to accept markets are manipulated. They're manipulated because the big money can push the damn thing around, right? And it's either you bitch about it and complain all day long, or if you can't beat them, join them. If you know this stuff's going on, then you say, guess what? I'm not getting short until that's filled, right? Something like that. But you've got to just accept that's what's going on in here. If you had big enough size, you can manipulate it too. Again, that's all I did all day long. Back then, spoofing was legal. So I could I played the games by hand, right? What's spoofing? It's this is why there's nothing in the order book nowadays. But because guys got
Scott, show crude, and if for a spoof, there is a really good example.
One. I can't believe we retested this zone, by the way.
So look at that bottom, that low, recent low. Yeah,
oh, that's here.
That's just indicative of a spoof.
Right, guys, look at this. Wait. But I thought spoofing is illegal. I'm doing air quotes again. This is exactly what happened right here. This market was coming down. Hey, let's throw some size in and scare them. You can't see it now in the order book. And then it ran away. Oh, let's go ahead and pull it. That's a spoof right there. This is illegal. You got to prove they did. A spoof is when you put an order in and you don't have the intention of getting filled, right? You're putting it in size in the order book to scare the market away or the algos away, right? And the algos, this is what algos do. They get near, they see size and they run away. So this is I didn't even see that. Good catch, Bruce. It looks exactly like a spoof. These guys did not want to get filled. If they wanted to get filled, then why didn't they move it up and fill? They just pulled it. Once the market ran away, I'm like, okay, yeah, we got it. They ran away. So anyway, this is what I used to do all day long, every day, manipulate the market. It was completely legal back then. Now it's not. So there's your ATR, there's your retest, there's your ATR, there's your retest. And if this fails, now I'm going to go short. Not afraid of Mr. Spoofer over there. That price, not a trade recommendation. This is what I'm doing. Again, if you want to fade me, have at it. This is the price that I will get in. I'm going to set it up on my other platform. That would be ATR, retest, failure. Okay. So if I go short personally at that price, then my stop is going to be 76.44. I'm risking 80 ticks on the trade. Doesn't matter what I'm risking. I just adjust my size. I could put on that size. I'll round up to 3. and I'll stop out at that price. Well, what's that price? That's 110% of an ATR above the top of that zone. And that stops me, prevents me from getting, oh no, oh no, I hate when that happens. Hold on. It's my drawer. It dims my screen. I have no idea why. Okay. That stops me from getting out, oh my gosh, algoed in areas that are meaningless. Nothing's going on. If this market's able to push all the way outside 110% of ATR, then I know I'm wrong. On to the next trade. And it's just that over and over and over and over. All right, that's a lot of talking, Bruce. Any questions? We're actually over the time. I didn't realize what time it was.
Yeah, no. We're all caught up on questions. Everything looks pretty good here. So yeah. Let's we can wrap it up, Scott.
All right, let me just see if this is a bullish setup in ES. This will be a good hedge for my short too, because I can be long ES and short. I don't like those trades, but it doesn't matter what I like. It's just I'm following my rules, right? Let's just make sure this ATR is spot on. 6.64 exactly. So the long price has had to get up to 94.50 to make this a bullish setup. Hey, look at, wow, I can't believe it got exactly there and it's pulling back to the zone. I've never seen this. Has anyone in my room seen this routine before? Guys, it's uncanny. It really is uncanny. This is why I built a trade for this exact thing. Still a trade in progress, but it's just silly. Anyway, this is a bullish setup. That's ATR. Here's your retest. Failure, I will go long. What's that? I will personally. It's not, I'm not recommending you go long. That's what I'm doing. That would be at 95. I will stop out at 78.50. If that happens. Now you want to pay, I'm getting off this webinar. You want to pay attention to this area, like I said. Now, if this does a crude, like I showed you, it goes like this, and right through the zone, and this gets an ATR out of here, that's not good for this market. And then if it gets through this stuff, these guys are going to be feeling some major pain. So this is one big area. Pay attention to it. All right, I'm losing my voice too. So that's all I got.
All right.
Still short this. I got my stop in. It's not on here, obviously. Not a recommendation. I hate saying that. I sound like the Tom guy. I'm not saying that every 5 seconds. So my trades are me. That's what I'm doing. You can fade me. You can do whatever you want. The whole idea is you guys are learning what I'm doing, why I'm doing it, how I'm doing it, and incorporate it into your own trading. That's the goal.
Yeah, exactly. All right. Well, yeah, thanks, Scott. Great stuff. And good to be back. And or at least for me, I know you were with Sam, and he does an excellent job in there. But we'll see you next Thursday then.
Yeah, cool. Appreciate it, guys. I do this twice a day in my room. Come on by and learn how to trade.
Yeah. Let me put. I forgot to do that. I'll put Scott's information in here. If you want to reach out to Scott, you can. Here's the contact information in YouTube, and then also over in Discord. Okay. So yeah. All right. Yeah, thank you very much.
Sure. Thanks for having me. I'll see you guys next week.
Okay. Bye.
Thanks. Bye.